So there are various modules which you have to learn in Oracle Fusion Finance, and General Ledger is the main module. So coming to General Ledger, see we have General Ledger, we have accounts payable, we have accounts receivable, we have cash management, we have fixed assets, right? So say suppose what is general ledger and what are sub ledger. There is a concept called general ledger and sub ledger. So say suppose I ask you during month end, I ask you what is your cash in bank. Say suppose you have two bank accounts. One is SBI bank account, one is HDFC bank account. So if I ask you what is how much balance you are having in your bank, you will ask me what is which bank you are talking about, HDFC or SBI. So I ask you during month end. See, I don't know all your bank accounts. What is the balance? Then you will say 1 lakh. 1 lakh. You will say HDFC 70,000 and SBI 30,000. In this example, cash in bank, which is your balance. Sneha's bank balance is 1 lakh. HDFC Bank is 70,000. SBI is 30,000. So Sneha's bank account balance is general ledger. SBI and HDFC are sub ledgers. Did you get the concept of general ledger and sub ledger?
Yes.
Okay. So in Oracle, in general ledger, this is general ledger, and sub ledgers are accounts payable, accounts receivable, cash management, and fixed assets. So given in the example which I have already given you, I am telling all your bank transactions during the month you are doing in individual bank accounts, that is HDFC or SBI, the individual transactions only during the month end, the balance which you are putting up in your financial accounts, you are writing in a book, you are writing in an Excel that this is my bank balance is general ledger. So I am telling all your transactions of sales and purchase in business you will be doing in accounts payable and accounts receivable and cash management of fixed assets. But during month end, all these balances, the ending balance of it, the final balances, you are transferring it to general ledger. Is this concept correct? Is this, you have understood this concept?
Yeah.
Yeah. And coming to the second example, which I am telling is during the, say suppose, um, you have sold a goods worth 2,000 to me. So you have sold a goods worth 2,000 to me and that are in transit during 31st, last day of the year. So what you will do, you will book a sales. You will book sales of 2,000. Say suppose during month you have sold about 1 lakh. In this, you have this 2,000 rupees is also there. So in your books, you will be writing as 1 lakh. I am your customer. I am your customer. All this 1 lakh you have sold to me, but I haven't received that goods yet, right? On 31st January night, I will be receiving them on 1st February. So in my books, there is only 98,000. So you are having a book of, you have made a sales of 1 lakh, which is true, which is 100% true. And 1 lakh rupees you are having in your books. But in my books, in your customer books, there is he showing only 98,000 during 31st January night. So in this case, there is a difference. What is the difference? The difference of 2,000. So the difference of 2,000, you will be booking in, not in subledgers. So that you will accounts payable, accounts receivable, you will not book differences in subledgers. You will directly book that subledger that invoice in your general ledger. So whatever differences are there, this 2000 you will be booking in general ledger and you will be reversing it in February 1st. So what you are doing here is you are on this 31st January this period. So 1 lakh you will be booked. And in my case, what I will be doing is, as there is a difference, the 2000 rupees I will be booking in general ledger and I will be reversing it on 1st February, because this is a temporary adjustment which I am doing, because and the invoice which is in transit, I will receive it on 1st February and 2nd February. And if I book that, then the 1 lakh balance will match. Both this 1 lakh balance will match. So I need to reverse it, because if I have booked 1 lakh, so 98,000 was there. There is a difference. You said that it is in travel, so I'll book 2,000. So then 1 lakh. Then the original invoice comes. Then it will be 1 lakh 2,000. 1 lakh 2,000 and 1 lakh. That will be, there will be a difference, right? So what I will be doing is, during 31st January, I will be booking a adjustment. All these adjustments we need to do in general ledger. In this 2000 rupees adjustment, I will be doing in my general ledger, and I will be reversing on 1st February. In 1st February, when the invoice comes, I will be booking that invoice with the date 31st January. And there, so that the balances will be 1 lakh in both the books. These adjustments are taken in the place in general ledger. So in general ledger, what you will be doing, all the sub ledger balances you will be getting in general ledger. And the second point which I said you is, any adjustments which we make in during month end will be coming to general ledger. Is this point clear?
Yes. So this is in the case of only last date of month only any
Yeah, during
transactions has to be
month
done.
end procedure.
Okay.
Okay. And giving another example of subledger and general ledger, giving one more example of subledger and general ledger, or there is difference adjustments. Your bank will, during month end, you will see your balance is 1 lakh rupees in your books, but in bank balance there is 1 lakh 2,000 rupees. You will understand why there is 2,000 more amount in my bank. I have recorded everything. I have recorded everything in 100%. Then you will get to know that bank has deposited your interest income or interest expense, all these things your bank will be having. Your cash book, your whatever books you are maintaining, whatever software you are maintaining, you will not get, right?
Mhm.
So all these adjustments, if the books are closed, needs to be made in general ledger. If the books are open, so the books are open, then you need to make in sub ledgers. Okay, I'm just telling the adjustments part. There are adjustments which you need to make. If the books are closed, you will be doing it in general ledger. If your books are open, you will be doing. In the first case scenario, as the invoice you have not got, then you will be doing it in general ledger.
Okay.
Okay. So, keeping this interest example aside, I believe you have understood two things: the bank subledger and general ledger concept with the bank example. And second thing is, during month end, there are adjustments which we need to make in general ledger. I hope you have understood this both the concepts.
Yes. Yes.
Okay. Aris, and also there is this third concept called there are two concepts which is cash concept and accrual concept. Accrual accounting and cash accounting. So what you do is, say suppose you are having an ice cream shop. An ice cream shop, what generally happens when the customer will come, he will make a so he will ask you, so you will sell and you will write. So cash concept is, when you receive, you will enter. When you pay, you enter. At that time, then and there only. Okay. You have understood cash concept. Cash concept is nothing but, if you have paid to someone, you will write as expense. If you received, you will write as receipt. Is this fine?
Yes.
Okay.
Yes.
Okay. Then comes the accrual concept. In accrual concept, what happens is, if there is a predictable loss in future, say suppose you are running a kirana shop or any other business or any example, if you know that you will be incurring loss in future, you need to record it currently. You know that you need to there is a way. So say suppose you have given an order of a purchase of raw material or clothes, so you know that got damaged, but if you receive it only, you need to record in cash concept. But in accrual concept, you will be, as you know that there is a loss which will happen in future, or if there is a legal case on your business which you are which seems like you are going to lose, you need to record it in the current, like 2000 rupees you need to record, or some 50,000 you are incurring, you need to record that in accrual concept. Whereas in the same, in the vice versa example, you know that you are going to gain. So if you know that you are winning the case, definitely you are going to winning the case, you should not record. So in accrual concept, only the expenses and losses which you are going to incur in future or incurred in current will be recorded. Whereas receipts, the future receipts won't be recorded, only when the receipts are recorded, only when they are received. So I am telling, if I can reframe it again, in losses, expenses, existing losses, whatever happened on a current basis, you are recording, and future losses, expenses also you are recording. In receipts, only the current receipts. If you have received a receipt, you are recording. The future receipts, you are not recording, or the future cases or anything, you are not recording. That is accrual concept. Have you understood accrual concept?
Yes.
Okay. So in cash concept, what you will do, if you made a sales, expenses, losses, whatever is incurred, you are recording. Receipts, whatever is incurred, you are recording. In accrual concept, receipts, whatever is incurred, you are recording. But when it comes to expenses and losses, whatever is currently happening, you are recording, and future also, if you foresee any losses or any expenses, you will be recording. That is called a standard accrual concept, which is majorly used in Oracle Future Finance and most of the companies. This is more of a
Mhm.
accounts based concept, which I'm telling you.
Yes, just in approval cycle, just like in a medical shop, if some medicines should be expired, so that kind of thing we should record it in current. I think so.
Exactly. Superb example, Sneha. What you said is,
Mhm.
you know that in 1 month, all these expenses or all these medicines of 20,000,
Mm.
definitely incur a loss. So you will be recording in the current month only. Next month, you will be recording, you will be having a loss. So this month only you will show the 20,000 rupees expense. Okay.
Mm.
Very good. Very good example, actually.